Hey Moon Crew, I hope by now most of you have a great grasp on assets and liabilities because that's important to this video. We need every advantage we can get in the market environment, and financial education is crucial. Quickly, assets give you money and liabilities take money away. That's simple but transformationally important. Today we're going to focus on a simple secret that will accelerate your wealth building. It's called stockpiling. I'm Chase and this is the MoonShot Money channel. Are you ready? Let's go. Stockpiling assets. That is the name of the game if you have an early retirement goal and you want to be able to help other people along life's journey. You can't give more if you need help paying your own light bill. We're going to look at 3 assets today that will help propel you on a road to financial success. The first idea is often overlooked and sometimes frowned upon. Stockpile cash. Stockpiling cash is hard for many to do. There is a powerful temptation to spend it as soon as you get some. To clarify, we firmly believe in having an emergency fund to take care of any short-term needs. We also are in favor of paying off those high-interest credit cards before you start stockpiling cash. Just to be clear, some will have critical views on cash because of low to no interest being earned, as well as the melting away of the value due to inflation. Those are very valid points that we agree with, but let me give you another set of points to consider. When opportunities come, we want to be positioned to take advantage of them. For instance, let's say you have $5,000 cash saved up in the bank and you have an acquaintance that needs to raise some capital very quickly and offers something of twice or more the value in exchange for quick cash. You're ready and able to take advantage of the opportunity by quickly buying and reselling an item for say 50 to 100% more than you gave. Boom! Cash made that possible. If you were cashless, the opportunity would have passed you by. These opportunities come in the stock market too through corrections, giving those with dry powder or cash a chance to buy great companies at reduced prices. Smart money sometimes will liquidate positions when they think the market is getting overbought and then sit and wait for the correction. Then they load the boat all over again. In those circumstances, liquidity is very valuable. Obviously, the more cash you have on hand, the more opportunities you can take advantage of. Stockpiling cash is not popular, but cash is a powerful liquid asset. We try to stockpile it when we can and just watch and wait. The second asset to stockpile is stocks. There is a conservative theory on diversification that makes sense if you're not going to actively monitor your investments. Buying the entire market or an S&P 500 ETF will get you diversification, and you can stockpile these as well. Your investments will be safer, but they'll grow slower. The risk tolerance is totally up to you. Another approach is to pick an incredible company and stockpile shares. This is what Warren Buffett has done through the years, and more recently, he has stockpiled Apple. His Apple stockpile makes up 42% of Berkshire's portfolio. Warren Buffett's insurance conglomerate has made nearly $100 billion on Apple, making the iPhone maker one of the 90-year-old billionaire investor's best investments of all time. Stockpiling Apple has worked out brilliantly for him. This strategy ties back to the first. It takes cash to stockpile shares when an opportunity arises. No cash, no shares. Here's a report from last March during the coronavirus shutdown. Billionaire entrepreneur and Dallas Mavericks owner Mark Cuban has admitted to buying shares of Live Nation at this unlikely time. Cuban told CNBC that he was dipping his toes in Live Nation after the entertainment giant halted its slate of worldwide concerts and saw stocks plummet to nearly 70% in just a matter of weeks. News of Cuban's investment came not long after Live Nation CEO Michael Rapino also bought $1 million in shares of his own company amid the market's downturn. Rapino reportedly bought over 25,000 shares for an average price of $38.98, a stark difference from its February 19 high of $76.08. Nevertheless, the CEO maintained that Live Nation would bounce back in time and see strong business throughout the busy summer concert season. Today, Live Nation's stock price is over $84 a share. Cash on hand has allowed these men to more than double their money in a little over a year. That's smart. And you can do the same if you're willing to save your extra cash rather than just spend it. Let me add, the S&P 500 or SPY is up over 40% in the last year, so you would have done well stockpiling there too. But the better return was in discounted companies like Live Nation. A company we really like right now is Coinbase, ticker COIN. As a leading mainstream cryptocurrency exchange in the United States, Coinbase has become a standard on-ramp for new crypto investors. Coinbase offers a wide variety of products, including cryptocurrency investing, an advanced trading platform, custodial accounts for institutions, a wallet for retail investors, and its own US dollar stable coin. Coinbase was founded in 2012 and is a fully regulated and licensed cryptocurrency exchange supporting all US states except Hawaii. The price has seen a massive correction from its high of $429 all the way down to a new low of $238. We believe this is a tremendous opportunity for those with the means and the time to wait. News and information happens so quickly, so make sure you follow us over on Twitter at MoonShot Money 1 for fast-breaking info from our team. And this is not financial advice, but merely a family documenting our investing journey here on YouTube. But we would love to have you as a subscriber. It takes a lot of time to do the research, to film these videos, edit, and post on the YouTube channel, so we really would appreciate it for you to take just a couple seconds to give us a like down below. It's your way of saying thanks to us for all the information. All right, the third asset to stockpile is real estate. This is a great investment for your future, but it's nowhere near as liquid as cash or stocks. That's the drawback to real estate, but there are some incredible advantages to owning the right properties. We currently own a mobile home park, apartment buildings, commercial buildings, and houses that we rent. If you have some handyman skills or some great contacts in the home repair field, you might want to give this a try. Not only do we receive monthly rent payments, but you also receive appreciation and tax benefits. Warning though, you can't overpay for a property. You have to wait for real estate to cycle in order to find the bargains. This asset stockpile again ties back to the first, stockpiling cash. Most banks require 15 to 20% down in order to finance a commercial piece of property. Without cash, it's very difficult to take advantage of a golden opportunity. Even if you find a property with owner financing, there's still an element of cash involved, closing costs and repairs to name two. The right property at the right price can put you in a situation where someone else is paying for that asset for you through rents. The better the purchase price, the better chance you have of collecting mortgage, insurance, taxes, and maintenance through rents. If your rent is covering all four, then you have hit a home run. Stockpile some cash and go look for that next deal. We hope you've enjoyed this short video today. And what are some of the ideas that you have for stockpiling assets? Let us know in the comments below. Earn more, save more, invest more, and give more. And always remember, if you're not interested in your money, someone else is. Have a great day, everyone, and we'll see you on the moon.